A very good afternoon to all the delegates who joined today's very important CPE program. I'd like to welcome you to the final CPE program of this year of SIRC. And I must say, it has been a phenomenal year. It was initially dotted with challenges. Within less than a week from when we took over, we were hit by the COVID situation, but we did not let that buckle us down, and we have done a record number of programs. In fact, in the history of our SIRC, everything has been virtual naturally, but we have got excellent viewership, and we have been able to reach out to not only our members in South India, but we are able to serve the members across India and internationally as well. So I must say, it's been a very fruitful year as secretary, and we are very happy and enthusiastic to serve the members. So I thank all the members who have been so encouraging and so participative in making this a very grand success. Before we proceed to the special address by a council member, CA Chinnamastan, and our star speaker of the day, CA Aniruddh, I will request Selva, our admin, to please share a video recording of what the chairman has just shared. He is not able to join today's program, so I request you to please share the video. Selva, over to you.
Friends, happy evening to all of you. We welcome you to this last meeting, me as being the chairman of SIRC, on audit materiality. I had an excellent past 1 year where I was able to interact with all of you and kind of give the best to the SIRC, to all its members, students and stakeholders, and very happy that we were recognized as the best regional council for the year 2020. And as regards the meetings, we ensured that all the contemporary topics which are more relevant were kind of made available for members. And even the last meeting, it was a request from a specific member that why don't we have something on audit materiality, and we thought it will be very appropriate to have a meeting on that. So I wish you all a very happy learning, and also taking this opportunity to wish you all a very great year ahead under the leadership of the next chairman, who is going to take over on the 24th of February 2021. So I sign off as chairman of SIRC, this being the last meeting, wishing once again all of you all the best, and we'll be staying connected and be in touch with you on the next future occasions. Thank you, all of you.
Yeah, thank you so much, Selva. Now I request my fellow regional council colleague, CA Chinnamastan, to please deliver his special address.
Thank you, Abhishek. I hope my voice is clear. Yes. Chairman of SIRC, CA DC Jain Sab, in absence here, who addressed the recorded message, and Secretary of SIRC, CA Abhishek Murli, and today's session speaker, CA Aniruddh Sankaran sir, and other senior members of the profession, my dear members who joined today's technical session on how to practically use the audit sampling and practical changes. A very warm good evening to everyone. My dear friends, you know, as that secretary and the chairman expressed, this is the program, is the last program as a chairman capacity and that secretary capacity. So I hope this this two person having the term of the regional council another 1 year, so they will continue in the council and they will give that best service to the members. As I want to share the latestly you got that message also from the SIRC. The SIRC region has got the best region award at national level, and also the SICASA Students Association also has got the best award at the national level, and few of the branches has got that best branch awards, that is the Shivakasi branch and the Salem branch, Belgavi branch, Tirupur and Ernakulam branch, Vijayawada branch, Bangalore and Hyderabad. These branches from our region has performed at a national level and they got that best branch awards. I congratulate to all the members of the branch and especially to the MC members of the branch. As that chairman has expressed, we used to call him as a DC Jain, but it's his name is Digital Jain. So he missed the last session in the online meetings. He's having the preoccupation at SIRC programs at Salem. So, dear members, the today topics is the similar line, which would help the members. Everyone is doing the audit in day-to-day affairs, and for our fraternity is not a new one, but one should always careful about the volume of sampling they consider for forming the opinion of the financials. Though it's a subject to matter of as far as the size of the sample is concerned, but one has to standardize their sample size to form an opinion, as the size always depends on several parameters such as type of business, number of transactions, number of premises in which they are operating, etc. I believe this session would definitely enrich our members in updating their techniques of their audit procedure and helps discharging their service in the best manner. I wish you all very best for the next coming programs and participation. Thank you so much.
Thank you very much, CH Mastan, our council colleague joining us live from Hyderabad. Thank you very much for a very lovely opening address as always. Before I introduce our speaker, I'd like to shortly touch on this topic. As very rightly pointed out in the special address by Chinnamastan, audit sampling is a very, very important tool of the auditor. It is impractical for us to do 100% audit. It's a small company with the 15, 20 transactions, maybe even 100 transactions. You can do 100% vouching. They used to say, go tick all the vouchers. So many articles they would have been used to that. But as an organization grows, as a transaction structure grows, I think you will all appreciate it's impractical and impossible also to do it. And sometimes even if you do it, it does not mean that you can get your assurance from that particular audit. So audit sampling is a technique. It is not very simple. You cannot just feed it in a system and expect a science behind it. There is a methodology behind it, and it's very, very important that as auditors, I'm sure you're all aware that now even for small and medium-sized audits, there is going to be a quality review board. There's going to be for your tax audits as well, and for your financial audits as well, and statutory audits. So in all the statistical tools and audit sampling. So today we have with us, if I can say, one of the best speakers on this topic, the very, very dynamic CA Aniruddh Sankaran, who I have the privilege of introducing. He is a partner with a leading multinational firm based in Chennai and has more than 25 years of core audit experience across various sectors. He's worked across several industries and has served large listed companies, foreign investments in India, and even entrepreneurial companies. In fact, he regularly represents the ICAI as well. He served as an invitee on the ICAI Auditing and Assurance Standard Board, Accounting Standard Board, the Financial Reporting Review Group, and the Research Committee as well. He has also assisted the ICAI in drafting and authoring various standards, guidance notes, implementation guide, and is a regular speaker on matters of professional interest. In fact, I must add, he is a true leader, and I've heard firsthand from many of his juniors in his organization of how he has taken them under his wing, mentored them, and helped them blossom into wonderful professionals. In fact, my wife was also his junior in his firm, and she's had the privilege of having learned from him. So he's a truly dynamic person, very down to earth as well. To sit and talk with him is very, very enjoyable. And thank you so much, Aniruddh. I know you're a very, very busy professional. In fact, we were so insistent on bringing Aniruddh, so we told him, whatever dates you have, you please choose. We want you to come. You choose a date. So despite his very, very hectic travel schedule, in fact, he's traveling tomorrow morning itself, he gave today's time. So thank you so much, Aniruddh. It's always a pleasure to listen to you, and you have really, it's an opportunity for our members to listen to one of the best in the category. So thank you so much for taking time out of your schedule to join us today. We welcome you.
Thank you so much, Abhishek. and thank you, Srinivasan sir. Am I audible? Is it clear? Yeah. Okay. So I think you have already embarrassed me sufficiently, and you also set the expectation bar quite extremely high. So I hope we can do justice to that here today. I can do justice. So thank you for that. Let's start off with today's session on audit sampling with a focus on usage and practical challenges. Now, what are we going to look at today? And I know the session is scheduled from 5 to 7. It is 11 past 5. I don't think we will take the entire time, and we'll probably finish in an hour and a little more than that. And after that, any questions, I am happy to take them as long as I know the answers to your questions. Otherwise, I will also research and probably come back to you, which is what I end up doing more often. So, just in terms of overall agenda, what we would like to look at today is an overview and the whole context of sampling today. And as Chairman rightly said, I think, and Secretary Abhishek sir also said, there is, it's a very critical element of what we do today, particularly given the size of companies. Now, having looked at that, we'll talk about key concepts. And the reason, and a lot of this will be theoretical, I will have to grant you that. But wherever possible, without that base theory knowledge requirement, it is not going to be practical to look at what are the real challenges, etc. So we'll deal with some challenges as and when you go through both the concepts and the usage. And then we'll deal with some challenges practically itself that have arisen. Unfortunately, given the nature of this session, had this been a physical live session, we would have made it like a workshop, a Q&A kind of a thing. Unfortunately, that's not going to be practically possible here. So we've tried to just put it on a slide, and we'll talk about. And the reason I think this is important, I know many of you in the audience are experienced auditors who are very aware of what audit is and what it entails. But there is always the risk that we miss out on something or the other. That is not to say that what I've done here today or through my career has been complete and comprehensive. We all make mistakes, we all learn from them. But I think that learning never stops, and therefore, even for me, if there are some elements of this session here today that are incomplete, I will be more than happy to take your feedback on some of these. But another reason I mentioned that is, as professionals, there is just so much happening today in terms of changes. Almost every day, there is some new law, some new regulation, something somewhere that we might not know. And it is important to know about it. I remember I was taking a session with the Institute about 4 years back, and this was around the time INDAS was implemented. I'm deviating from sampling, but I'll come back to it in a minute. I was talking to a professional, in the lecture, and I said, I hope you're all aware of, it was on financial reporting. So I said, I hope you're all aware that you need to know INDAS. So one gentleman, very senior professional, very experienced person who I know from elsewhere, he said, yeah, but I don't need to know INDAS. I only audit very small companies. I said, that's okay, sir. And then we got lost. And then finally he said, I have one question. I have a company where there is an investor. He is a listed company. So I said, once again, sir, sometime back you said you only audit small companies. You're saying you have an investee of a listed company. I said, yeah. So I said, how do you not know INDAS? No, it is not applicable. And then I realized that some of those applicability criteria itself was not something that person was not aware of. And when I mentioned it to him, he realized that he had signed 1 year's accounts wrong. He should have done it under INDAS. He did it under the old accounting standards. So things like that happen, and I think this continuous updation is critical. And so, despite sampling as a concept being something that's been there for so many years, I think it's important to at least go back to it and look at what it is today. So, with that introduction, I'd like to start. What is sampling? Very simple. Sampling is drawing conclusions about a large piece of information by looking at certain examples. It's what you would normally do. Suppose you have a normal credit card bill of, let's say, 30,000 a month. You will look at it, look at a few transactions, probably look at something which is, oh, what is this 5,000 rupees that I have? I normally don't have 5,000 rupees. Then you will check back what the difference. Okay, that month you had a major purchase. Okay, understood. So, but the rest of it seems okay because that is your normal level of bills that you would get. So that effect, what you have done when you do that checking of your credit card is sampling. Same way, electricity bill. Normally I get 1,500 rupees bill. This month is 2,200. Why? Okay, I think about it. And this may not be sampling directly, but the concept is the same. And then you say, okay, there were some months in some days in this month, it was the middle of summer, so I had to use more AC. That gives you the answer. So essentially, you are drawing conclusion about your entire bill or the entire population, but applying procedures only to a specific item of that population, specific set of items less than 100%. As Secretary said right at the beginning, in anything other than a very small company, it is not possible to test 100%. What sampling also helps us do is reduce our acceptable audit risk. And you are all aware that there is audit risk, which is a function of inherent risk, the control risk, which together give you the combined risk. And applied on that, the detection risk, which is the risk that an error may not be detected. All of this gives you the audit risk, and the acceptable audit risk, depending on the level of comfort one requires and the nature of assurance that one has to do, is audit theory says it's 95 to 98%. So sampling is supposed to give the level of confidence as high as 95 to 98% that there are no errors or no more than the expected amount of errors in a given population. Before I go into this, I just want to tell you a very interesting incident, very short incident that happened in the context of sampling a few years ago. I met a very senior professional. We were talking about, and I was doing some very in-depth research on audit sampling, going into the statistical analysis, all of that. So I went to this gentleman to borrow some books on this. And he said, why are you doing all this? So I said, no, I want to understand the theory. And I want to see how it can be made efficient, or if there's a way to make it consistent. I was involved in part of the team that developed the ICFR guidance note. So it was, I think, in that context. So I went to him and I asked him. He said, I don't know why you guys are doing all this. In my time, when we used, and a senior professional, in my time, when we used to do all this, we will say, okay, let's take some 4,000, 5,000 vouchers and check. Oh, there are a couple of errors. Okay, take another 200, 300 and check. And I started laughing. He said, why are you laughing? I said, sir, I don't have the time to today check 5,000 of anything. Not just 5,000 of these vouchers, 5,000 of anything I don't have the time to check today. So what are we trying to do? And that's when I realized that the approach we used to take as auditors, and I'm saying 30, 40 years ago, is no longer the approach today. And we have to move with the times. And what are the times? See, 30, 40, 50 years ago, books were being maintained manually. Okay. There was a lot more time on everybody's hands. Today, we don't really have the time. Today, there's so much more technology. If you ask me a system like, any kind of ERP, my personal view is it more than it complicates more than simplifies a lot of the processes. I know it's required, but from a practical standpoint, I think it's overcomplicated. So with a lot of that happening, what is the point of checking 5,000 vouchers and 3,000 extra and all of that? So moving from what it was a few decades ago to today, the technology has changed, the way in which books are maintained has changed. And for us as auditors today, I'll be very honest, in a few years, this whole concept of sampling may be out of the window. The reason I say that is, at the end of the day, what are you doing in your sampling? You take some samples. We'll get into the random or MUS and all that stuff. But we take a set of samples, test them, and based on that, we give a conclusion about the overall financials. I'm talking the financial. But with the kind of data there is today, there is either stated or innate and unstated expectation by various stakeholders that you look at big data and draw your conclusions from that and investigate what is critical rather than what is normal. If you take an exception rate, okay, of say 3%, saying 3 in every 100 transactions or balances or amounts could be wrong. Use big data to draw your conclusion about 97 and focus on the 3. Why are you looking at, drawing 40 samples, of which 97% is anyway going to be right, which is in the normal scenario, that 100 minus 3 being 97. So the expectation of users has also changed drastically. Though the audit committees today do not want to hear about, oh, how many samples do you check? That was the question 20 years ago, 30 years ago. No longer the case. So, it's why this whole concept needs to be applied, therefore, from a very focused standpoint. I said it a few minutes ago that this might not be relevant in a few years. I don't think that is entirely true. That is just to shock some reactions out of the audience here. But I think the reality is that we will have to use it much more in a focused manner, in a precise manner. So with that context, let us start. So where are we using sampling first? I think the whole concept of sampling will be applied, as I said, would start with your credit card bill and go right up to your financials. Right? So we are talking about as accountants and as auditors. Obviously, it can and should be and is used in financial statement audits, but even there, it is important to look at which aspects of internal of financial statement audit. There is a reporting on internal controls that is applicable for most companies. So that is one place to use it. Then, when you are auditing the financial statements itself, I'm sure you're all experienced auditors, you're aware that you can take a controls-based or a controls reliance approach or a substantive approach. So when you are using those control-based approach, there is a way to apply sampling. And of course, there is a way to apply it when you are doing substantive, which is when you are testing details, amounts. And of course, other than financial statement audit, typically every audit, I mean, even if it is a quality audit that is done by non-chartered accountants, they also use sampling. They use it in different ways, but the fact of the matter is sampling is used in various things, including internal. And of course, sampling links to certain other standards as well. And it kind of very nicely dovetails into the objectives of an audit, because one of the objectives of audit is to get reasonable assurance, not absolute assurance. So sampling helps us achieve that without having to spend excessive effort, because there has to be a reasonable level of cost to justify the assurance that the auditor is providing. Similarly, there is a link to auditing standards on designing and performing audit procedures, because what the auditor is required to do under 500 is to design the nature, timing, and extent of the procedures. Nature, we know what is the work. Timing, okay, year-end, inter-end, quarter-end, whatever. But the extent, how much you do, is driven by samples. And of course, there is the implementation guide itself on SA 530, which is an audit sample, which deals with some of the more detailed aspects. But you are all experienced auditors. I'm not going to get into too much of the detailed aspects, but we'll look at some of the concepts. This is what I was mentioning a little while back in terms of what is the relevance of sampling. Given that there is, the volume of transactions is increasing, companies are now generating. I mean, how do you audit a Reliance? I mean, Reliance has more invoices than your normal company's turnover in rupees crores. Right? That's the kind of transaction volume we're talking about. Obviously, 100% check is not possible, not just on Reliance, but on most companies. Unlike the Secretary said right at the beginning, unless it's a very small company with 50, 100 transactions, you cannot check 100%. What it also does is, obviously, it helps in identifying errors and frauds. But the use of it also, there is an element where sampling comes in, where today auditors need to or are allowed to use the work of the internal auditor to see to support their own procedures. So I can get some of my audit work done through the internal audit, subject to whatever SA 16 allows you to do and procedures around that. But I can test what the internal auditor is checked on a sample basis and still get my overall comfort. That is something that we've never probably done. Not too many of us might have done that. That's something to do. It is also important because regulators are increasing their level of scrutiny on the approach or the methodology used by auditors. One of those aspects is sampling, because a lot of issues, actually, if you look at the NFRA's observations, or the QRB observations in particular. Significant number of them are around use of sampling and appropriate use of sampling. We'll talk about some of those issues in due course. Okay. Having a strong, robust basis for sampling is useful to support arguments in legal forums, or when the work of the auditor is challenged, because that is a challenge to the auditor's professional judgment. And having the right sample and the documentation of that approach is absolutely useful. I mentioned big data a few minutes ago, and I think the use of automated tools support and drive some of how this big data is processed, and it's very conjoined with the use of audit sampling, in the sense that today one can use various other analytical tools to assess and analyze the significant majority of the data that the client gives and apply sampling on the rest. Also, the auditing standards require you to document and drive a conclusion as to how the auditor got comfort over items that he has not tested on the remainder. And for that, the big data comes into use. So that is why there is a very strong interlinkage between the two. And as I said, that's the exception-based testing. And so there could be a relatively lesser use for sampling than earlier, but it will be much more focused, which is why, and you will see these red boxes on the side on some of these slides. These are essentially some of the practical challenges in each of these concepts that slide talks about. So, for instance, in sampling itself and looking at the regulator approach and all of that, some of the questions that come are, and some of us as auditors ourselves have this doubt oftentimes as to whether the sample size is sufficient. Is this an appropriate sample size? See, if you look at it, and we'll get to the ICFR. Okay, let me talk about that. The guidance note on internal controls over financial reporting. Okay, I'm referring to this specifically because nowhere in your auditing standards do you actually have an indication of what should be your number of samples. Everywhere, sampling is professional judgment. You go to SA 530, there is no. You look at 500, nothing. So then, how many samples do you select? Now, what? So the whole auditing theory and all that has been driven by. There's a lot of international research and some Indian research on this, which finally has identified what should be the sample size depending on various factors. The guidance note on ICFR actually refers to the appendix to the standard on internal audit. That is the one I had referred here, SI 85, right? Which gives you some indication of what should be the sample size. We will talk about that in detail, but if you look at that sample size, example scenario, low risk area, it says if it's a daily control, okay, or an attribute that you are testing that occurs daily or multiple times a day. Do you know what according to the guidance note, the sample size is? Irrespective of how many times a day it applies over 365 days, the sample size in the guidance note for a low risk area is typically 25. So whether I'm auditing a 10 crore company or a Reliance, my sample size is 25. I'm making it very simple here, and I know it's not the case in all situations, but this practically can happen. So when someone looks at this and says, okay, you are auditing this massive company and you have picked only 25 samples for this particular, say, revenue or debtors or whatever. If you are testing a control, that is what you need. But today, will our regulators prepare to accept that? You forget regulators, as auditors, are we comfortable with a sample of 25? So is the sample size sufficient is a big challenge. Now, some of these questions are like the old Tamil movie says, I only know questions, I don't necessarily have all the answers. But I think it is something worth thinking about, because this is going to be a point of debate and struggle between auditors and regulators, or even within the auditor community itself, as to how much is sufficient. The second question, of course, is the sample relevant? Because you picked a sample. We're talking about the relevance of sampling here. You, as an auditor, let's assume you're, and most of this, the rest of this presentation and today's session will be more around financial statement audit as opposed to other types of audit. But just looking at it from this point of view, is the sample that you have selected really relevant? Look, there's a population from which you've taken. Is that really going to be representative of the rest of the population? Maybe, maybe not. And that is why it is a sample. That is why there is always a residual audit risk that can never be covered unless you do 100%. And there also, and because, rather not there also, but because of that, it drives the next question saying, eventually is sampling itself relevant? Okay, and that is why you go back to things like data-driven audits and all that. On the last point, as I've mentioned before, I think I have some directional answer, and that answer is that yes, sampling is definitely relevant, but in today's context, given technology, given tools that are available, etc., it is not as primary an approach as it used to be 3, 4, 5 decades. That is the main thrust of what I'd like to mention. I'm keeping some of this very general, as you might have seen so far, not getting into the technical aspects, because I think for us to understand what are the practical challenges and considerations, it is important to understand in what context we are applying. For actual application, there is theory, there is standard, there is implementation guide, all that is. But overall, otherwise, there is, some of these challenges are what make, in some ways, for a lot of us, the profession itself interesting. But these are the ones that are tomorrow going to be dealt with by, regulators, by audit committees, by other stakeholders, saying, what is the work that you as an auditor have doing? So, with that introduction and half an hour into today's session, I'm just going to get into key concepts. Some of these may be familiar to, or will be familiar to a lot of you, if not all of you. But please bear with me because we want to set some level of even base. So some of the key concepts we are dealing with today, and I'm not going to get into and explain each of these, but this is just to set the context because some of these are important. So population. One of the population is what? Population is the total base from which you pick your sample. It is the complete list of information. The problem is that the word complete is associated with it. Is the population from which you are selecting the sample complete? Please remember, and okay, I mentioned that 25 samples, right, for ICFR. You know how the 25 is computed? The 25 is computed based on a very, it's a formula that will take you 2 lines to write in an institute study material size of book on 1 page. That is how complex that formula is. That formula ends up giving you a number of 22.3 something. It is not even 25. 25 is a rounded off amount. You need 22 point some samples to check. But you know what will happen? If you, on that basis, you check your 22 or 25 samples. You add one more transaction to that entire population. That list of 25 that you selected is no longer valid. Because the way that formula runs and that concept runs is it takes what is called a seed number and then generates samples. I'm taking a typical random sample. So the completeness of that sample is absolutely critical. Even if, and I mean this quite literally, even if one transaction is added or taken out, your entire set of 25 will change. So if you have first selection, you had items 2, 4, 6, 8, 10, 12, like that, 25 samples up to 50. You, out of a sample of say 1 million transactions or 10 crore transactions, whatever you want, you add one more to that 10 crore. Your samples will no longer be this 2, 4, 6, 8. It will be something else. So it is important, and that is one of the issues we'll talk about later. The next concept is, of course, the sample. Sample is that unit that you have taken for testing. Sampling techniques, which is the application of what basis you are using to select the sample. And this is very critical because sometimes the sampling that we do as auditors is to look for exceptions and leave it at that. And sometimes it is for projecting errors. Now, if you take a non-statistical approach to sampling, which could be a judgmental sampling, haphazard sampling, okay, those are all acceptable, no doubt, as long as there is a basis for it. So I'll give you an example. One of my seniors, when I say senior, much senior to me, who I used to work with, his way of sampling, other than whatever the methodology and the standards required to do, you know what he would do to test? He would take the bunch of vouchers, he would look at it sideways, and he'll say which voucher has them. You know, some vouchers they would have seen multiple times, so the edges will be like a book, right? Very well thumbed edges of paper on that. Obviously, that means that that voucher has some significance. That is the voucher he will look at. Okay, it's a great approach to audit, but the problem is it gives you qualitative information but not quantitative. So it's a non-statistical basis. And the problem with non-statistical is you cannot use a non-statistical basis to project errors. And projection of errors and evaluating results are the last two on this left side of this slide. So we'll come to that, but it is important to understand which method to use. Similarly, there's a concept of stratification. Now, if you take again the same example, broad example I was talking about earlier, Reliance. Now, in Reliance, obviously there are multiple businesses. Okay, there are multiple flows of transactions. So when you select samples, it would be erroneous and ridiculous to a large extent to look at all the business transactions together, because there's customer production of products, there is services, there is oil and gas, there is this, there's that. So obviously one can do a stratification, and sometimes if you don't do stratification, it is not going to be possible to rely on the results of the audit sampling. But while doing that sampling, it is an important thing to remember that one ends up in the trap of potentially looking at a sample of a sample. We will come to why this is an issue later on, but please hold that thought. So when getting into sampling, obviously designing the sample selection and linking it to assertions is critical. What is it that one wants to test? Often we see auditors making the mistake, and I work with a lot of juniors, and a lot of them are very experienced auditors, 5-10 years post qualification. Sometimes what happens is if you pick the wrong assertion, okay, then the whole sampling goes for a toss. I'll give you an example. Can you do sampling for checking creditors' completeness? And people will send creditors confirmations based on sampling. How do you send? The whole concept of creditors is a risk of understatement. You can do sampling like this for overstatement. How can you do it for understatement of credit? You can't. So, because what you are looking for with creditors is what is not in the books. Why would so you will never know what is your completeness of operation to which you have to send out confirmation. So your sampling approach itself is flawed to some extent. So what is the assertion that you are looking to address, and therefore what is the sampling approach? And then of course the question on sample size. If I go to that other auditor I was telling you about, who is a Chennai-based person who I will not name, he will say take 5,000 samples. You ask me, I will say 25 samples. Where is 5,000? Where is 20? So things like that to take care. Then there's the concept of error. An error in a sample will have different implications. We will see that in our challenges. Okay, and there are different types of errors, and it is important to distinguish those between those so that the right approach can be taken to remediate what the impact of those errors. And finally, evaluating results. Again, we will deal with that as part of the application in conclusion. Areas of application I mentioned earlier. Other, in addition to financial reporting, it's on internal ICFR, internal audit, IFC as well for management testing, and then test of details across various things. I've just put a sample of account captions here. But if you look at receivables and payables, I've said confirmations and cutoffs. So there are some things where you can use even if it's for payables. For instance, you might not be able to use confirmations to check completeness of creditors, and for which you may have to rely significantly on controls. But you can use confirmation to validate the valuation of the measurement assertion. Right? Similarly for inventory, and a lot of auditors actually don't focus as much as they should on assertion. It's all at an account level for many people, but the standard requires one to get into assertion level, and that is why I mentioned on the left side that designing the sample selection and link to assertions is. So let's quickly look at some of the approaches and usage for sampling. Now, obviously, the technique will depend on the basis, and I'm looking at the left side of the slide here. The sampling technique will depend on the characteristics of the population. Then there could be, as I mentioned, stratifications, is dividing the population into groups which are homogeneous, which therefore means that you are identifying a characteristic based on a common parameter without increasing the risk of applying your sampling. And then, of course, value weighting if required. So why are all of these here? All of these are here because the first one, based on characteristics, means what you are looking for is an attribute. And when you have to test an attribute, what is an attribute? An attribute is a characteristic. It is, I mean, it is what it is. It's a characteristic of that particular transaction or balance or whatever. When you're testing for an attribute, it doesn't matter normally what the value of the populations of the samples. Okay, but going down to the next one, stratification. Here, what you're looking at is the quality of certain transactions being homogeneous, and using that quality, you're grouping. The third one is more based on value. This is typically what a lot of auditors, a lot of us do in terms of a generic approach and saying, look at the high value amounts and test and vouch them or test them, whatever. So it's value weighted because you're going by value. Now, none of these are wrong, but there has to be, and it sounds like madness, but there will have to be some method in that. So the 5 typical approaches of or methods of sample selection address each of these scenarios. One is random selection, where you apply random number generators. So there are 2 elements to sampling. Firstly, how many samples to test is one. The second is which samples to test. So I have to run. So normally when you run, and this essentially talks about the second one, but we'll spend a minute on the first aspect as well. When I take an account balance, how many samples should I test? Now that depends, as I said earlier, on what are you testing for. Are you testing for controls? Are you testing for attributes? For instance, are you testing if a voucher has been approved before being paid, and that approval is for the purchase being checked, it is for the payment entry being done, the accrual entry being done, and the payment entry being done. Someone approves it, only then it gets posted. You are then looking for that attribute, right? So there the value doesn't matter. I am going to look at saying, okay, I will apply the standard formula, whatever it happens many times a day. So the approach that I will take is, say, based on that, I will test 25 samples. Then which 25? Is it 1, 2, 3, 4, 5, or is it no, whatever it is? And if there are 10 crore transactions, which of those 25? Which 25 out of those 10? So when you are looking at some, now what that number of 25, for instance, that I said is applicable more for attributes. Whereas when you look at how much in terms of a value one needs to select, what that goes by typically in audit, and this is what 500 also says, is you look at what are your large transactions. In materiality, there's a concept of performance materiality. There's a planning materiality, there's a performance materiality, and there's something called a clearly trivial amount below which adjustments are not taken. So based on the audit risk that is there, the combined risk, the inherent risk and the controls risk, or you determine what is the combined risk, and then based on that combined risk and based on some of the other procedures one is expected to perform, like analytical procedures, substantive analytical procedures, the auditor determines what is the residual risk. Now, based on that, the account balance and the level of your performance materiality, it will say how many samples to select. This is normally the calculation. Now, a lot of firms, the larger firms typically have softwares, because this is not something that can be ever calculated manually. So there are softwares of their own. Others, what typically they use are internet-based software that are available to say what should be my sample size on a lot of these things. So depending on the account, the number of samples you may need to send may be different. right? And there are, so in those kind of situations, you may have a large enough account that requires you to send 500 samples. You will come. Then you decide whether that is the right approach or not. And there is a way to overcome that also. I'll give you an example. Suppose, and we'll deal with this example also later. Suppose you're auditing a bank as a, let's say, a centralized bank or an NBFC. The bank and people start thinking about branch auditing. So take an NBFC, take a microfinance company. The company may have a 5,000 crore portfolio, okay, but no single loan transaction, loan balance or loan account is going to have a balance more than 5 lakhs. Sometimes not even that. There are, I have audited a small finance bank whose typical microfinance borrower balance on average is 20,000 rupees. The bank's portfolio is 3,000, 4,000 crores. So how are you going to send out confirmation? How many confirmations will you send out? 50,000 confirmations. The bank has 2 crore borrowers. How many confirmations will you send? Sometimes that is not possible and it's not practical. So there you can probably take a different approach. One of them will come later, so I'll talk about it. Okay. But that is in terms, all of this is in terms of determining how many samples to select. And then you get to the next step, which is the actual selection of the sample. That, as I've said on this slide, can be done through either random selection, where you're looking for an attribute, systematic selection, so which is every 5th or every 10th sample you select. So, but how many do you select? So, suppose there are 1 lakh transactions, and you decide that you're going to test 100, and that's your sample size. Every 1,000th in that 1 lakh transactions, what you use. Third is monetary unit, which is value weighted, which is on the extreme left bottom that you see, where the focus is on 2 things. One, the focus on testing is on the higher value of the higher value transactions in the list. And 2, what it does, it gives you the ability to project errors better. Because when you have a random, suppose you're looking for an attribute and you say that, oh, in my sample of 100, I found that only, or a sample of say 1,000, I found 15 transactions that were not having that attribute, whatever is that attribute, say sign off, approval. You cannot say what the value will be, because those 15 transactions may be of 10 rupee transactions, which is why there was no approval. And your risk may lie with much larger value transactions. So monetary unit sample. So in a random sampling, you can normally never do a projection of the of errors. That is possible in monetary unit sampling. So that is why we do. Then of course haphazard sampling without a technique. And as I told you, the example of my senior who used to look at well-used invoices is a very acceptable method. But again, please think about it. It is great auditing, but it might not be great basis to support when it comes to a regulator's review, and say when the regulator says how did you get control, on what basis do you pick this up. Block selection is an approach that people used to take many years ago. I don't think people do that now, and the reason they took this was again efficiency, because if you said you wanted to test 5,000 samples like the other gentleman I was referring, you can't, it's impossible, not impossible, it's extremely hard to just pick 5,000 different ones. So I'll say, okay, from item number 90, I will pick the next 20 transactions. So I look at one block, and next item number 5,000, I will look at the next 20 transactions, and so on. So you're doing blocks within the whole population. So these are again, and that one of the reasons for that is saying if they were all done at the same time or together around the same time, they are likely to share similar characteristics. So there is a reason, yes, but is that necessarily appropriate? Is something that needs to be thought through. So not all of these are all the theory, and these are all in your standards today, but not all of these are relevant or practical in today's context. So as I mentioned, the sampling approach can be judgmental, okay, which is both qualitative and quantitative. Someone can say, well-used invoices more than so much value. So it's all entirely professional judgment. Or it can be statistical, and in that there is quantitative and qualitative factors. Right. Random variables and MUS come under the quantitative, where the focus is on either an attribute Okay, not and it is different. It is while the attribute is a quality, it is not the same as qualitative statistical sampling. That's why it is appearing on the left, random, right? But and then you have variables estimation. We'll talk about variables estimation very briefly because I don't know a single person who I've met who knows what variable estimation sampling is. I also don't know. What it conceptually is it's a slightly different way of applying MUS, where normally, as I mentioned earlier, sampling of some of these things, especially the monetary value samplings, are good for testing the risk of overstatement, never understatement. With variables estimation sampling, there is a specific tool that one has to use to, based on which and based on the outcomes of that sampling, you can even do it for the risk of understatement, like creditor. So there is random sampling, variables estimation sampling, monetary unit we've seen before, and then there is discovery sampling. If you remember 3 minutes ago, I left you with the thought of an NBFC with 2 crore borrowers, or a small bank with 2 crore borrowers, individually small transactions. Discovery sampling, excuse me, 1 minute. Discovery sampling is something that helps us where you have large populations with small sample units. What it does is, based on the various, obviously in a situation like that where the ticket size is small and the volume is high, as an auditor you would have performed a lot of other procedures to assess the correctness of the balance, but you still want to apply certain qualitative thresholds or approaches to check and validate if that transaction really contains any errors, having got your overall comfort from other procedures. So then what you are able to do is, even if you have a very large number of transactions, you use that other work you have done to say that my level of expected error here, and normally, as I said, we are expecting 95 to 98%. So there's a 1 to 2% in an audit expected error rate. But when you're using discovery sampling, you say my error rate is virtually 0. When you start with that perception, it puts a very high burden on the auditor to make sure that that proof gets validated. So the idea of discovery sampling is you assume 0 errors and then you test. You will still test some population, but at the end of it, the results of that will tell you whether what you have checked is comprehensive enough, and therefore will marry with some of the other procedures. I have personally applied discovery sampling, and I'll tell you, many years ago we applied it in the context of a bank, which had something like 30,000 crore in terms of loan book, and something like 5 crore borrowers or some obscenely large number. You know what is the size of the risk? We did a lot of the other procedures. Yes, you can check some very large loan accounts, but when you have a portfolio of 30,000 crores, no amount of monetary unit testing or value sampling is going to give you comfort. So we did a lot of analytical work, etc., etc. And finally, we said we will do discovery sampling. You know how many samples we had to test, and it still gave us the right level of comfort. We tested 120 samples. When we tested 120 samples, we got 0 errors. Okay. Then this went through. This company was a SEC issuer of some sort. So the work that we did got reviewed by a foreign regulator. This was completely accepted. The Indian regulator has not reviewed that work, and it's many years, so not so much an issue. But point was that this was something they looked for, did not find any issue. So it's a very acceptable method. It's just that a lot of us are not necessarily aware of this method or how to apply it and when to apply it. Therefore, the question really, and this is the practical challenge, is when you don't know that there are so many methods, it's easy to apply sampling because you will pick whatever you want to. It's mostly judgment. But when you know that there are these various approaches, which is the correct method to use? And that is what I have put down on these last boxes here. Most sampling presumes a low level of error rate, and that is common to all the 3 quantitative aspects. The random sampling you will use when there is a low level of errors usually with asset accounts or expense accounts where the risk is of overstatement. Right? Variable estimation, as I mentioned, is assessing the value of the misstatement for both overstatement and misstatement. And that is when you will use VES. But typically, we don't use VES because what VES can do for overstatement, MUS does. And what VES can do for understatement, like liability balances, is very complicated, which is why it's really the practical reason why most people don't use VES. Monetary unit sampling, again, the risk is of overstatement, low level of errors based on value. So this is like most of the sampling that we do based on, and most things that we do based on value. Discovery, I just mentioned, typically large volume, low value units. So the practical challenge is to assess which of these one comes. And again, one of the other things could also be professional judgment. So the practical challenge here is which method do I apply? And I think there is a lot of guidance in the implementation guide to SF530, which says which to apply them. And I think after a point of time, it can be fairly normal. Please bear in mind that some of the approaches to sampling will obviously require specialized tools to calculate, like I mentioned. Of course, in today's context, a lot of these are available online. There are audit softwares that are available which do this. Third-party audit softwares, which incorporate this and embed sampling. There are Excel-based sampling assistants that are available as add-ins and plugins that a lot of people have developed. I think Excel itself has a approach. So there is no dearth of where to get it, but even learning some of that is not very easy. So there is a practical challenge here in terms of using the right approach and then how to go about actually applying. So this is just a summary of what we spoke in terms of when you can or should apply each of these. Most of this we've looked at. So if you look at the level of errors, the emphasis on monetary value, all of that. Again, the first set of 5 bullets that you see here deal with the qualitative and quantitative aspects that we spoke. So I'm not going to get too much. This is something that I thought was very relevant for us here, because often the question is how much do I sample, right? And the sample size, right, will depend on a lot of these factors. Whether you take a higher sample or low, whether you need a higher sample size or lower sample size will depend on some of these things. So, for instance, if your if your tolerable rate of deviation is high, so you're willing to take more, you will probably have to test more samples, right? On the other hand, if your risk of material misstatement is low, okay, because you've done other alternate procedures, then the evidence you are going to get from sampling is not going to add too much. Because if you look at it, really, I'll show you another slide. I know I'm jumping slides, but I just want to show this one, the bottom part here to you. Right? This is your overall risk assessment, right? Moving on a scale of low to high. And usually this is a mix of inherent risk and control risk. Right? Now, the control risk can always be addressed through a test of control procedure, but the inherent risk can only be addressed by a substantive procedure in most cases, or an attribute test. So the value of assurance that one gets will obviously go up as your risk moves, and will be proportionate to how much the contributor of that risk is. So if you have a lower inherent risk and a higher control risk, right, you will probably have to do more procedures on the controls, but less procedures on substantive. This is only indicative. The yellow TOC box that you see on the second part, right side, is only indicative. How much of that TOC will matter? So if you're looking at, because normally the auditing guidance gives this very explicitly, it says you can never expect, as we said at the beginning, never get 100% assurance. You can get up to 95%. How do you get that 95% comfort or the degree of confidence is a mix of controls procedures and substantive procedures. So, and how much you will perform on each of these depends on various factors. So that is the reason I wanted to show you that slide, right? And if you look at the right side here, this has also got test of controls and test of details here. So these are based on what is the kind of procedure, what is the kind of risk, whether it's higher or lower, and then based on each of these factors. So these factors, for instance, are around operating effectiveness of controls. If there's a lower operating effectiveness, you will test higher number of samples. And this is for the controls, sometimes even for the substantive. Because you are saying there are likely to be more errors. So I cannot stop with a small population. I have to test a larger population. And obviously, if you get lower comfort from your controls risk, you have to increase your other substantive procedures to meet that overall evidence bucket, let's call it. So lower level of assurance that the tolerable rate is not exceeded by actual rate. So how do you get that assurance? Again, through other procedures. If you have very little assurance that no, I'm saying this is going, that might be a 1%, 2% error, but I'm not. So there is a degree of error and there's a degree of confidence. I always keep telling people, I say, well, guess my weight. Okay, give me a range. And if someone, it's very easy to say you are between 0 and 100 kgs. You can say that with 100% confidence almost with most people, right? So you can have a range that is very wide, but the wider your range, your precision becomes very less. You can have 100% confidence, but the precision, which is the range, is very small. Whereas to get it right, to say someone's exactly 70 kgs is extremely precise. But the level of confidence you will have to say that is going to be very low. So similarly here, what is the level of assurance that the actual is deviant from the expected rate of deviation? So if that is lower, that is, you have a lower precision, then you test more. So the sample size increases. If that is less, sample size increases. So various things, various factors that one needs to consider. Again, these are some of the practical challenges, and that is why I'm dealing with these here and not in another context, because it is important to know that there could be any number of factors that could affect your sample size, right? And you have to, as auditors, be responsive. Your audit procedures have to be responsive to those factors. It cannot be the same test of 25, which is the next slide that I have. You cannot test the same thing of 25 in all cases. Simple here itself, and this is the appendix to SIA 5, that is the internal auditing standard, which is referred to from an internal controls point. Even there it says where you have a lower risk of failure, which is nothing but a higher degree of reliance on internal controls, right? And a decrease in sample size there. You test this much, and in the case of a daily or a recurring control, where the risk of failure is higher, okay, you test. Let me see if I can point to. Look at this one here. We're talking about 40. Right? So it can matter. So what is this table? So for a minute now, let's just take a look at this particular table here. Right? What this is the frequency of the control activity and how much sample you have. Now, if a control activity is done once a year, and this is, mind you, this is purely for controls. No, it is not. I'm just taking one example here because this is the only place, as I mentioned earlier, this is the only place where some kind of a sample size is explicitly written. Okay. Therefore, this can be applied for internal controls or financial reporting, and probably extending that logic for any tests where you are testing controls as part of your audit procedures. If you are not testing controls, you cannot apply this. You have to apply a very specific approach to identifying what should be your sample size and then what should be your actual size. And that's why I mentioned those tools, excuse me, for the audit tools and the sampling assessment tools that are available. So if you have a control that's an annual control, obviously it happens once a year. So whether you have a low risk of failure or high risk of failure, you will test once. If you have a control that's quarterly, I mean, assuming half yearly is not really practical. Even as half yearly, there are only 2 instances when the control runs. So you will probably, if you're testing sample, you can only test one. You cannot test it as another sample. But what it permits you is to do quarterly, right? Rather, to do a test quarterly as 1 + 1. That is 1 out of the 3 quarters and 1 for year end or a period end, because that is something you cannot ignore. Okay. And that will remain the same as lower risk or higher risk. Okay. If that control is performed more often, then again, see, if you look at it, look at this monthly control, for instance. The difference between 2 and 3, whether it's a low risk or high risk, is not significant, because 3 out of 12 excuse me, is 1/4 the population. Okay. Similarly, for weekly and for daily controls. Now, what typically we do for most cases is, or we should be doing, is applying that last one, which is for recurring manual control. Right. Now, this is what standard says. Now, there are 2 elements here. One I've not spoken about, one I'm going to talk about. This talks about recurring. All of this is for controls that are manual controls, because there are different times. What do you do for IT controls? Because the system is the same, the software is the same, the underlying application is the same. How many times will you test it? Please think for a minute for yourself. How many times you might test the IT control? And the answer very simply is 1. Because the system is not changing. Different people are not performing. You can have the same approval being done by 5 people who are senior manager finance in a large organization. Right? That is not the case with a technology-based control. So as long as the application has not changed, okay, it is sufficient to test one control, and that gives you comfort over the entire population, which is going back to the introductory comments that I made. With technology being what it is today, tomorrow, when I say tomorrow, in the next few years, your audit may just be the equivalent of testing one transaction for one sample for every type of content. It's a very far into the future situation, but I want to put it out. The second thing that we've not spoken about is, when doing this, okay, what happens if you have errors, if you have exceptions? So let's deal with some of those. Now, most of the things that you see on the slide are practical challenges. Some of these are basic, and a lot of you will be or may be familiar with them. Some of these may not be as straightforward. So I'm just going to use the spotlight here.
I'm sorry, it's fine. You're audible and screen is visible.
Okay, that's fine, right?
Fine.
So one of the things is, therefore, sampling on sales. Suppose you're doing audit procedures on sales, okay, and one of the procedures, one of the samples you find is that there's a cancelled sales invoice. What do you do? And you can think of this in the context. I've used sales. You can look at it in the context of any invoice or any document that is cancelled. Okay. So here the company's sales invoice is lost. The second one is where you are doing a purchase. The underlying invoice is lost, which is the third-party document. It's not an internal document. So let's take some answers for some of these, and I'm just going to read out what I or tell you what I think should be done. So in all of these, and okay, the third one is you are sending out confirmations for trade receivables. You sent out 50 confirmations. You did not get 2. What do you do? Is that an error? Is a non-response an error? The first 2 I don't know, may or may not be errors. The third one error. What happens when you expected 2 errors in a sample of 100, but you got 3? So these are all exception cases, and these are the most, and I'm dealing with the most standard, typical type of exception. So the answers and these could be applicable among the first 2 in general, is if there is a control exception, the first thing that needs to be done in terms of assessment, you normally expect it to work fine, but if it does not, the first thing that one needs to do is assess what is the reason for the exception. So for instance, you have a cancelled sales invoice. It may be a genuine cancellation. So is there an alternate that supports the fact that it is cancelled? Now, if it is cancelled, okay, it is no longer part of your revenue, so it cannot be tested. So a case like this needs a replacement to be sampled. So the question really is this genuine, or is this a genuine exclusion of an item from the population, or is it an error Okay, and in this case, I would tend to think that it is an exclusion rather than an error. Suppose this sales invoice continues to be there, but the lorry receipt for the shipment is not there or talks about a different quantity. That may be an exception. Similarly, sampling on purchase, the underlying invoice is lost. Now, there may be any number of reasons for this. This could be a case where, because now the purchase is recorded, but there is no invoice to support it. Now, there may be any number of reasons, and this is where the auditor's judgment comes into play. But based on inquiries, it may turn out that, okay, there was a fire, there was some accident, this invoice got lost. So fine, then you use your judgment to say whether there's an exception, or I can't, unlike sales where it's just a question of replacing one sample with the other. Here is an actual, there is not an exception. Here is an exception. So then you would probably have to test more than just one for each of the underlying invoice loss. It again depends on the reasons. If there is, so suppose tomorrow you ask and say the company says, look, the invoice is lost, but I have a scanned copy of that. It may be acceptable. Right? Yes, there are limitations to using technology underlying evidence, but in that case you might test one or two more extras. For something like a receivables confirmation where you sent out confirmation but not received the response, it is no fault of the company. So there it is neither an exception nor a replacement situation, right? So here what you do, this is normal, this I think most of us know the answer, which is that you are going to now do alternate procedures. You will do another procedure like looking at subsequent collections of cash in the bank, right? To see whether the procedure you sought or the assertion you sought to be addressed by that confirmation has been addressed in some other way, which is why I go back to saying linking this back to the assertion is what is. And then when the fourth one is when you have more than the expected number of errors, that is when it starts getting tricky, because here there is no standardized guidance on what needs to be done. It only says that if there are exceptions, you test more samples. So I just want to go back to this for instance. Where there's a low risk of failure, okay, you would not expect any errors. Now, if you find an exception, let's say this daily or recurring manual control test 25, I do not expect any exceptions. So I do 25, I find no exceptions, fine. But if I find one exception, one very easy way to look at it is say, I will immediately classify it as higher risk and I will do 40 instead of 25, which means not an additional 40, additional 15. Okay, that is one way to look at it. But then the question is, what happens when if my risk itself is a higher risk and I'm testing 40, okay, and there is a exception, then there is nothing to say how much more I need to do. A lot of the firms, a lot of the auditors typically say, okay, I will move this by a factor, okay, of anything between 40 and 50%. So they will add another 20 to this and say, I will test 60. Now you have already exceeded, right, that error threshold. Now in that 60, if there is one more error, what do you do? Then that sampling goes for a toss. You cannot rely on that. So then you have to go to other procedure, which is why what happens when the number of errors exceeds expectation is an absolutely critical element of what needs to be. And that's why professional judgment comes into play. And of course, the next thing is to assess whether the exception that has come out, okay, has an impact on financial statement misstatement or not. And that's why, and that misstatement will come if you are not able to apply alternate procedures, which is why across all of these, it is important to investigate the nature of the cause and assess if there's an anomaly. Okay, and is there really a reason why the misstatement is not representative of the population? So, for instance, you find that you're testing 100 invoices, one of them does not have the required signature or some control, just signature and example. What do you do in such situation? Now, based on that, someone might say, oh, look, that sample that you took for that day, that particular person was on leave. Now, is that an anomaly or an exception? You might check leave records and say, yes, indeed, that person was on leave the other day. Okay, so fair enough, it's an anomaly. I get comfort on the rest of the population, it is fine. So in that case, I am treating it as an anomaly. I will not do an alternate procedure. I will not do a replacement invoice. I will not test additional. I will let that anomaly be because it is acceptable. But whether I can do that or not is a question of preference. And the last thing, of course, is projecting misstatements, as I said earlier. It is important to apply the right approach to sampling to determine if you can even make a projection. Then assume you can, if you have done stratified sampling, the projection needs to be done by sampling. And these kind of anomalies that we spoke about, those need to be excluded by them. Similar, pretty much the same thing. Okay. And one of the important things is management has to investigate. The company has to investigate the misstatements if the auditor is unable to make a conclusion or is a reasonable basis is not right there. So it's important to assess whether it's a key item, is there a difference, is the anomaly same as what we spoke about. So evaluating misstatements and errors in the sample is a very, very core, practical, and real everyday challenge for auditors, for us auditors to do this. I've spoken about audit risk evaluation and statements. I'm not going to get too much into this. The one thing that I've spoken about here is on the last is dual purpose testing. I'll just see if I can. Dual purpose testing, and if you remember, we said there's test of control, there's test of duty. There are sometimes what you can do is, and we probably do it more often than we think. Okay. What dual purpose does is it helps you get comfort on both the value and the attribute. But here's the thing. It has to have been planned and documented as a dual purpose. If you did it only to check value and later on you realize that, oh, all of these also have their signatures, and therefore, it's a good enough reason for me to say the controls work, it will not work. You have to have documented a basis to say, I will test the same invoices for both controls and value, which is practically doable from an ICFR standpoint. Where you will test the same sample. Now you have to be careful whether you need to test so many. So for instance, when you're testing details, you might be required to test 500 samples, right? But for controls, you might only be required to test 25 or 40. Why would you go do the extra? So you have to be very clear about some of these things. But more often than not, where this is useful is if you have a lower number of transactions relatively, each of high value, you can, while doing your test of controls itself, get a lot of the representative samples for your test of details now. And that is where the dual purpose testing comes. So I want to quickly talk about that. And then, of course, the other application. So far we looked at financial statements. The other place where you will apply exceptions and anomalies and deficiencies is around internal controls. Again, it is important here to assess whether this has, is this an anomaly, is this an exception? But with internal controls, the problem is you don't have a quantity, they don't have a value. So you have to determine whether the deviation is acceptable or it is unacceptable. And if it's unacceptable, okay, it becomes a deficiency. Right? Then there is a qualitative assessment of whether it's a significant deficiency. And these are concepts that I'm not bringing out. These are all in the guidance on ICFR. Right? And that deficiency could be either in the design of the control or its operating effect. And if that deficiency has the ability to have a material mistake, it becomes a material weakness. So all of these go into the internal control reporting. But the reason I wanted to mention this is the impact of the sample you are selecting and that error that you have could result in something like a qualified ICFR report. And also please remember that this also has a direct impact on your sample size when you're doing test of substantive details and substantive material. Because if you have a controls exception, as I mentioned in that slide of higher and lower sample size, the moment you have a control exception, the sample size on that as well as the substantive procedures increases. So as we spoke earlier, having done the sampling, having done the tests, we evaluated for test of controls, now for test of details. Again, look at the exceptions, qualitative aspects. These are the things that we spoke about. What is resistant anomaly, etc. And of course, one thing I forgot to mention, which is in this slide here, is that is there a fraud? Okay, is something that could also. I'm not saying that you can identify all fraud through sampling, never. But if there is an exception, it is important to assess whether there could be a fraud, which is the cause of that exception. So I'm going from effect to cause rather than cause to. Okay. And increasingly, regulators are focusing on it. And whether the auditor has made that assessment. They're not saying it is a fraud. They're saying you as an auditor should assess every exception to say, is it the result of a fraud? Every exception, not everything. And the other big thing here is the projection of misstatements, which is not very easy, which is why a lot of people tend to just do extra work rather than do the projection of misstatements. The projection is a highly statistical calculation, which most of us are not capable. And based on that, we typically do additional procedures. This is both with controls testing and substantive testing, which is what I've summarized on this slide. But fundamentally, is that an anomaly, or is it that it's not representative of the population? Is it a representative feature? Okay, or is it not representative due to an anomaly? It could be on any of these. It's not a feature. It is a feature. It's an anomaly. And then the nature of procedures one would have to do will differ accordingly in order to conclude that there is reasonable basis to rely on that evidence. Dual purpose we spoke, and the key issue here, or the practical challenge, is when can the auditor use dual purpose? As I mentioned, it has to be planned as a dual purpose, but you can use it when, let's say, you're doing an internal controls audit, where whatever samples you select for internal control testing, you can check the value of it also for the purpose of your substantive audit. We'll come to the last section, which is around the common errors and regulators' expectations. Okay, and all of these are practical challenges, which is why all of these are in red. And these are essentially culled out from both your NFRA observations, QRG reports over the last few years, and some of my own experience and what I've heard from other professionals. Okay. So let's quickly look at each of these one by one. It will probably take 5 minutes, but it's worth spending that time, 5 to 10 minutes. First, the rationale for sample size and the basis of selection. I mentioned this earlier. There has to be a basis of sampling, like the 25. Even today, although that number of 25 is there in ICFR indirectly through reference to SIA 5, regulators will still challenge, saying what is the basis of this number, and could challenge. And if they find it is inadequate, then it is what it is. So there has to be a basis. There has to be a rationale as to what is the sample size. Why have you taken this? And one of the things that obviously is not here is, we'll come to that. It's there in the third. Okay. So the basis of selection is critical. The second is testing sample of a sample. This happens more often than we think. So what happens is, let us say you decided to test, all amounts more than 1 lakh in some companies, and you end up with 1,000 samples. Then you say, okay, I have 1,000 samples. It is too much, so I will not test that. In that, that itself becomes a population, so I will test some of those. Sounds logical, but the problem is you are saying that your initial assessment was that any transaction more than 1 lakh was significant enough for you to cause a potential misstatement. How can you test only some of that? So effectively, it becomes a sample of a sample. And the minute a regulator sees that, they will start to fume. So this happens more commonly than you think in very, very routine scenarios. So testing sample of a sample happens more often than you think, and we should be very careful when you are planning the procedure itself, right? Because normally what will happen, the reason this comes up is the procedure will say, in today's this thing, a lot of firms, including my firm, we do journal entry testing. This is the equivalent of your ledger scrutiny many years ago, but you pick large value journal entries and test them. Okay, so or you test with the qualitative factor. So for instance, one of the standard tests we would do is where you have debit fixed assets and a credit going to an expense. Okay, now there might be multiple transactions, and in that you might have ignored a 1,000 rupee transaction. But a regulator has a problem with that, because what you said was you will test every single transaction where the debit was to fixed assets and credit was to expense. Because you are not doing that, and because that is not aligned to your audit strategy, in theory, it is an audit failure. Okay. That is what it is. Okay. Then the next one is population used for sample selection not tested for completeness. Okay, which is I think also the last point. There's some repetition. As I mentioned earlier, unless the population is known to be the full population known to be absolutely complete, there is no way one can determine if the sample selection or the sample size for that matter is correct. So while you might have done a lot of sampling, okay, it is equally important to get that populated. I remember one case where, and this is in an QRB review, where the full list of items, okay, and this is in an account balance of, let's say, I don't know, maybe 300 crores. The full list of items added up to 299 point some crores. Okay, and what they were testing was 300 crores. The difference was not significant. We are talking about an amount maybe of 20 lakhs, 30 lakhs on a 300 crore. But the finding was that your population that you have used is not complete in the first place. And so your sample selection is wrong. Your entire ability to rely on all that work that you have done is wrong. This is a true story. It is there in the QRB findings reports of earlier years. You can read it. There are several findings in QRB. The other thing is sampling unit is not appropriate. When we spoke in the beginning, we said key concept, sampling units. What is a sampling unit? Sampling unit is a particular item of that population. Okay. So picking the wrong unit. Okay. So for instance, when if you are you sent out debtor confirmation, you do not get it. So you will start looking for subsequent collections as an alternate procedure. Okay, what is the sampling unit you sent out confirmations for is what is important. If you sent out a confirmation for the account balance, you have to test subsequent collection for that entire balance, not of specific invoices. However, if your sampling unit was specific invoices, you can do that. The standards allow you to do that. Professional standards allow you to say, send out confirmations to various debtors and say, can you please confirm that the amount you owed to XYZ company, which is your client, on this invoice on March 31st was so much. You can do that. In that case, your sampling unit becomes the invoice and not the party. So the right sampling unit to be used. Again, this is sounds very simple, but there are cases where this has been terribly misapplied. Number of samples tested, not considering sample size is fairly routine. Someone would have said, I've checked 24, forgot to do one. QRB, NFRA come on very heavily on. These are common errors, but at the same time, what are the expectations? Some of the errors are because the regulator is saying what you did is not right, but what do they want you to do? They want documentation of what is the objective of the sampling, what are you sampling and why, what is the risk you are trying to address, which is why one of the concepts I mentioned, right, is assertion. Assertion becomes key. Similarly, the basis of the sample selection, again, the rationale is something we looked at on the left. Evaluation of the samples. Is there a conclusion statement? Is there some assessment saying, okay, you did this? Is there something which says there were no exceptions? Because if you do not have that, you have not evaluated the outcome. You may have signed the audit report, but it is not sufficient. We spoke about deviations, exceptions, anomalies quite extensively earlier. The auditor's assessment of those deviations becomes critical, including how it impacts the report. And one of the things that regulators are expecting is clear evidence of how you have ensured that there is no bias in your selection, which is why haphazard sampling, judgmental sampling, today does not work very well. They prefer the use of computer assisted or computer aided audit tools. So this is pretty much what I wanted to present today. As I know it's not comprehensive, I know it is not the entire theory of audit sampling, but I think the deal was that we should look at what are some of the practical issues, challenges, expectations. And I think we've dealt with some of that here today. It is 6:30. I promised you hour and 15, hour and 30 minutes. I'm done. So if there are any questions we can take, or if there's anything specific, either Chinnasan sir or Abhishek, if you have anything in particular, I'm happy.
Yes, Selva, can you just share the questions?
Yes, sir. 1 minute. I'll just take a present rights. I hope my screen is visible.
Yes, yes. Aniruddh sir, I'll just read out the questions. It's on the screen also, but I'll just read it additionally. In the first question is from Raman sir. In selection of audit sampling, what level of personal judgment is important compared to the using of tools or techniques?
I think the personal judgment, I'll be very quick and brief with some of these answers, because it looks like there may be quite a few. The personal judgment, sir, is more from evaluating the outcome of the audit than in the selection of the sample. In the selection of the sample, it is preferable to more use tools rather than personal judgment. And that was the last point that I mentioned, that the regulator is very focused on making sure there is no bias and there's a preference to use computer assisted tools.
The next question is from Mrinal Kanti. What about audit tools? How to deal with PR review? Big CA firms customize the audit tools industry specific with the help of IT engineers. What is your view on this?
So see, today, in fact, earlier today, I got a mail from one of the large publication houses, and I think the institute also has some tie-ups as well for audit softwares, and those audit softwares include sampling tools. So today, these are not very expensive tools. These are not forget even the audit tool itself is not very expensive. The sampling tool, as I mentioned, there are sampling assistants that you can add into Excel. As long as there's a technology basis, that itself ensures that there's no bias and there's a systematic way of doing it. I think that's perfectly acceptable. So big CA firms customize the audit tools because I think they want to get some standardization within the whole thing, but it has nothing to do with the fact that they are big. I think today anyone can customize an audit.
Yes. The next question is from CA Shanmugha Priya. Could you please give an example of discovery as a sampling technique? Is the same as picking up samples based on the nature of the transactions like RPT?
So as I mentioned in the presentation, the discovery is not so much in the nature of the transaction. It is used typically for low value, high volume transactions where you are expecting no errors and you want to validate that your expectation is right. It is not necessarily an accepted method. I think that is the next question as well, right? 530 says it is not recommended, but then 530 was also, remember, 530 was written quite some time back. There is a project in IWSB that's happening on the entire sampling standard, which deals with some of these things, and I think that one clearly says 530 discovery is. I'm told that there is a project which is underway to look at sampling from the point of view of today's thing of high volume, low value transactions.
Yes. So the next question I think was covered by Sir, where CA Padma was asking about SA 530. So I'll go to the fifth question now. Can you suggest a sampling tool or a software for audit apart from the Excel add-in?
I don't readily know because I use the Excel add-in and some internal tools that we use in SIRC. But I think there are, so for example, Walter Kluwer's has a tool. I'm not sure of the names, but I can probably find out and get you know.
So next question appears to be a pretty long one. I'm just going to read it point by point. So one sampling method. Can you expand the question a little bit, Selva? I think something's cut off. Oh, okay, fine. in one sampling methodology possibly is any transaction that constitutes 1% of the population value or more selected. I think they're giving their view. B, any transaction that constitute 0.5 to 1% of population value or more, verify say 25 to 50%. C, anything in value less than 0.5% of the population value, apply statistical sampling basis, restrict to 25. This is a mix of attribute and monetary sampling. While this may not be totally statistical, what would the stand of the how would this stand the test of a regulator scrutiny?
So I think this, I'm reading the whole question as well, and I think this is an excellent question to ask. The short answer, and I'll give you a long answer also, but the short answer here is yes and no. Okay, it is acceptable to some extent, and beyond that, it is not. See, the first point that you made, sir, this item A, any transaction that constitutes 1% of the population value or more to be selected. Absolutely acceptable, because what you are doing is monetary unit sampling. You are identifying a monetary threshold and testing above that. After that is where you start having a problem, because now you are saying any transaction that is less than 1%, okay, verify 25 to 50%. Now what you are getting into is one of the pitfalls I mentioned earlier, which was you are now testing a sample of a sample. Because first you are saying the first sample is 0.5 to 1% of transaction value. In that you are going to test 25 to 50%. Then the third one is also a sample of a sample. So in this case, what I would do is establish that 1% of population value. I think population value is the wrong approach, because let us say you have a population value that's 100 crores, okay, but your performance materiality is 25 lakhs. You cannot take 1% of population. You have to take a percentage of your performance materiality. It may be going up to 100%, depending on the audit risk. Okay, but your threshold can normally not exceed 100% of your performance materiality. It has no correlation with the percentage of the population. So in our parlance, for instance, we call it key items. Anything that is significant in value is a key item. Beyond that, how much you test and what you test has to be determined by what you call as representative sampling, right? So there you don't have to take amounts. You can go by assume. So if let us say you test this, let's assume we go with your 1% of population value, and there are 0 such amounts. Okay, now what else are you going to test? So that will be a challenge, which is why the use of an audit tool, the sampling tool, and all that is best for something like that. But I'm also equally interested in the second and third aspects. So is it a mix of attribute and monetary sampling? You are testing for value, so there is no question of attribute sampling in your question, sir. Okay, and therefore, as I said earlier, because it is not strictly statistical, it is acceptable to some extent, but will not stand the test of regulator scrutiny. Okay, is it dual purpose sampling? It can be, but I'm not sure what is the attribute you are testing, because so far it looks like you're only looking at value and value orientation. But you may be able to use that to see. The problem with this is, how do you know? See, if I have a company where they're testing, they're doing some approvals, okay, obviously they will have the approvals for the higher value transactions. So that is a given. So you are not, unless you test representative samples. This is something I wanted to mention earlier also. Having tested a certain sample of your population, you also need to perform procedures to validate that the rest of the population which you have not tested does not contain material mistake. That is why you do representative sampling. And that is what will stand the test of regulators. Finally, your question, sir, here is on IT controls, where you said one. Yes, I did say one is enough. But to do that one test, what you have to do is validate the underlying IT application. So when you validate the IT application, that will tell you whether there is a program in it which asks you to skip every 100th or 1000th transaction. So having tested that underlying, okay, effectively what are you doing? You are testing an automatic. It is the same as your control. In your manual control test, you have tested the control because the control is established and you are testing it 25 times. If that control has a design flaw, it is a design failure of the control. Similarly, if this 100 or 1000 transactions is a problem, it is a design failure. Once you have cleared the design failure, For operating effectiveness testing, you only have to test.
So thank you for that. We've got the last question, Aniruddh sir. I'll just read that out. Have you been able to scientifically estimate the projected errors?
Anticlimax answer, Abhishek. No. Because I don't think it is going to. I have never been able to scientifically estimate projected errors. I'm sure there are better minds than me, 100%, who will do this. I have not done it. When I have had a situation like this, I mean, you try and overcome it through other ways. Either you make the adjustment or you test additional. It's all judgment, but projecting errors has never really been something that we've been able to. With a high degree, you can project errors. See, you can say that I picked an invoice for which was 10% of the population value. Okay, this invoice had a 5% error. Hypothetically, I can say the population has a 5% error. But there is no way you are going to believe that, right? It is like saying in the month of summer, my AC bill instead of 2,000 rupees became 2,500. Okay, therefore every month my AC bill is now going to be 25% more. Obviously not. It sounds ridiculous when I put it that way, right? So it's very hard to project errors.
I think that's a wonderful question to close the session on. So we've covered all the questions. Thank you so much, Aniruddh sir. As always, your inimitable style, very thorough presentation you have given and covered all the questions. So you've been able to answer quite in detail. So I'm sure our members are very, very enlightened. Now I request our regional council member, C. Chinnamastan, the dynamic Chinnamastan, joining us from Hyderabad to share his wrap-up points before I propose the vote of thanks.
Yeah, Abhishek. So I'm waiting. Yes, I'm waiting for that golden moments, which is the last program as a secretary for you. So please propose the vote of thanks. That's it. Go ahead.
So thank you so much, Chinna.
Thank you, Aniruddh.
So
Thank you.
Yes. Thank you. And my dear members, I had requested all the other office bearers to join, but unfortunately, due to a last-minute invitation, they are not able to join. So on behalf of, firstly, the chairman, vice chairman, C.A. Jalapati, secretary, of course, myself, the treasurer, C.A. Geeta from Bangalore, SICASA chairman, C.A. Pampanna, and all the other colleagues. We have C.A. Chinnamastan live with us, but all my other colleagues in the SIRC, they have been a huge pillar of support in making this year a grand success. And I would be remiss if I failed to thank all the erudite speakers like C.A. Aniruddh sir, who has come joined here despite a busy schedule. Every speaker like him, they have taken time out of their schedule to come and join us and enthrall our audiences. In fact, many speakers, when we started off the year, they were not comfortable getting on the a webcam and talking in front of a webcam. They needed people, and that interaction used to be a bedrock for your good presentations. But we have learned that this has become the new normal, and people have changed. And I would be remiss again if I failed to thank all the delegates and all the members of SIRC who have given us a huge support. In fact, we have made all the programs a grand success. We had one of the most successful regional conferences in our history of SIRC, and all the credit, end of the day, it goes to the members who have shown their support, their satisfaction, their happiness. So thank you so much for all the encouragement you have given us. We will continue to support you, give you the best quality programs, best quality support and knowledge resources that we can. And I thank you all from the depths of my heart for the sort of feedback that you have given us. So thank you all. Thank you so much, Aniruddh sir, for the wonderful presentation. And I thank C.A. Chinnamastan as well for joining us till the end of the program. So thank you all. Stay home, stay safe, take care.
Thank you, Abhishek. Thank you, Aniruddh sir. Thank you, members.